Hello everyone, welcome to the Classmore session for UAE Corporate Tax. Today we are going to discuss the recently announced corporate tax in UAE. So let us. So we can begin with the journey of this entire tax regime, which started in January 2022 when UAE government announced that we are going to bring a new corporate tax in UAE. And then in April 2022, they sent it for the public consultation. And finally, in December 2022, the law was enacted, and effective date for this law is 1st of June 2023, although the clarification has been given by the government that this will be effective for any financial year commencing after 1st June 2023. So we'll understand that in detail in the next slide. Generally, people talk about UAE corporate tax as a Dubai corporate tax, but there are others, emirates also. So UAE consists of 7 emirates. So it's not only Dubai, we have other emirates also where this law will be applicable. And when we talk about the financial year, this will be applicable effective financial year commencing on or after 1st June 2023. That means if any company is following the calendar year, means 1st January to 31st December as their financial year, then this law will be applicable from 1st January 2024 to 31st December 2024. And similarly, if the company is following April to March financial year, which most of the Indian companies follows, then it would be 1st April 2024 to 31st March 2025. Ahead, let's discuss some of the basic provision of the Dubai corporate tax. Who is liable to this tax? All the business activities, including sole proprietorship, corporates, or other form of organization. So basically, this tax is on the business activities, but there are certain exceptions. Uh, so first exception is any business engaged in the extraction and exploitation of the natural resources, because we have different provisions for them. Any personal income earned through employment or other non-business or non-commercial activities. So any person who is earning income from the salary will not be liable to the corporate because of the corporate tax. And any government organization or investment funds or charity funds, basically, if they are approved and following, fulfilling certain conditions. So we can say this is not a tax only for the corporates. This is a tax also for the sole proprietorship or the partnerships, and there will be the kind of different organization coming under the umbrella of the corporate tax. If we talk about the tax rates, so we have two slabs here, 1,0 to 3,75,000 AED. So in between that, there is a 0% tax rate, and anything above 3,75,000 AED would be a 9% flat tax rate. So it's one of the lowest tax rates that we have um, in UAE. If we compare it with other countries in the world. So there are certain important points to mention here. In case of unincorporated partnerships, this law is not applicable to them, but it will be assessed in the hands of partners. So each partner will be assessed as an individual person, and is liable to pay the corporate tax with his individual assessment. Similarly, there will be a different tax rates for the large corporates because we have OECD provisions coming in the Pillar 2. So those rates are yet to be um, declared. And finally, if we talk about the annual return and due date, so due date would be 9 months from the end of the financial year. So if we talk about the companies who are following the financial year as a calendar year, like 1st January to 31st December, then their financial year would be ending 31st December 2024. So they need to file the returns by the 30th September 2025. And the third important area to discuss is the free zone persons. So there are certain free zones which have been notified by the UAE government, where the tax rate would be 0%, but there are certain conditions they need to fulfill. For example, the first one would be to maintain the adequate substance. They should not select voluntarily, and they should not opt for a 9% tax rate voluntarily, and they should derive qualifying income. All these terms like qualifying income are yet to be clarified by the government through the circulars. And then they should also comply with the arm's length prices in the transfer pricing documentations. So these are some of the generic provisions for the corporate tax. And if good, then let's also discuss at high level what will be the residential status, how we will identify the residential status for any um, assessee here. So first of all, Act defines the natural person. So any natural person will be defined as resident, tax resident, if that individual's usual or principal place of business is in UAE and their center of financial and personal interest are in UAE. Secondly, if individual has been physically present in UAE for more than 183 days in consecutive 12 months, and finally, if individual has been physically present in UAE for a period of 90 days or more and he is a citizen of UAE. So these three conditions, either these has to be fulfilled to be the tax resident, and then their taxability will be assessed accordingly. And the second point here is the legal person, for example, the corporates. The first condition is that all these entities incorporated in UAE will be the tax resident for UAE. So any entity registered in UAE would automatically become the tax resident for UAE. And second, the entity incorporated outside UAE, if it is effectively managed and controlled from UAE, then it will also become the tax resident for UAE. So these are some of the highlights for the UAE corporate tax. It's a short video because we wanted to give a short overview of the corporate tax. In case you have any question, you can put that in the chat. And I hope this video was useful. Thank you so much.